Hi, I'm Rick Gaylor. Thanks for joining me. Real estate is one of the asset classes I recommend included in a diversified portfolio. For many small investors, the best way to hold real estate is through something called a REIT, or a real estate investment trust. So far, I guess so good. Go buy a REIT. But some REITs are about as appealing as a condemned apartment house beside a railroad track. I'm talking about high-cost private REITs. First, let me give you a little background. A REIT can only invest in real estate or mortgages, and the majority of REITs only own real estate. Most own scores of different classes of properties, including residential, commercial, office buildings, motels, hotels, assisted living centers, and public storage containers. This makes them a simple and safe way for small investors to add a diversified investment of real estate to their portfolios. Another advantage of REITs is that they must annually distribute all of their rental and capital gains income as dividends to shareholders. This, of course, can result in some favorable tax benefits. So, a nice investment. Has a place in a diversified portfolio. So there's a couple of ways to purchase shares of a REIT. Most popular is by buying shares of a REIT that is publicly traded on an exchange. Now, like any share traded on an exchange, this makes them really liquid and very transparent. When you buy traded REITs, you know what they own and you can analyze their track records. The second way to purchase shares of a non-traded REIT or a private REIT. It receives the same tax treatments as those publicly traded, and they have to distribute nearly all of their dividends as well. But that's really where most of the similarities end. A private REIT actually looks and smells more like a limited partnership. Those of you that have been around for a while, kind of the 1980s version when they were very popular. Usually all the money needed for the investment is raised on the front end. And since the shares are not listed on an exchange, once you're in, it's very hard to get out. You often don't know the full extent of the properties that the REIT will purchase. And they're not often as diversified as their publicly traded cousins. Of course, private REIT has no track record, so there's not much analysis that can be done. So why would anybody want to buy a private REIT? Well, ask a broker who sells them and you'll get a laundry list of the benefits, like stable pricing and higher dividends. Things so enticing you wonder why anyone would want to buy them. But the problem is, private REITs seem to be sold, not bought. They can pay up to 12% in marketing fees and commissions to the brokers that sell them. Public REITs, on the other hand, pay no commissions. Aside from the high cost, maybe the biggest reason to avoid private REITs is that they grossly underperform public REITs. This is according to an article in thinkadvisor.com by Michael Fink. A 2014 report by an independent REIT rating publication called Green Sheet Advisors concluded that privately held REITs underperformed publicly traded REITs by, and get this, 3.6% a year. Now that's huge. According to Fink, quote, "The darker side is that these products contain many opportunities for sponsors to take advantage of the lack of transparency that exists within the industry. High commissions erode shareholder value. Lack of management oversight can lead to excessive fees and the purchase of property for which there are frightening conflicts of interest. There is an abundance of horror stories of non-traded REITs gone bad in which dividends have been sliced, property values have plummeted either from bad markets or abuse, and investors are left with no ability to sell even their nearly worthless shares. End quote. It's not a glowing recommendation, is it? Fink also quotes Green Street Advisors co-founder John Fauchon as saying sponsors may view private REITs as a way to, and I quote, charge outrageous fees, have plenty of conflicts that we can exploit, and no one will know the difference because we won't list on an exchange. End quote. Wow. Given these drawbacks, I'm not willing to gamble even the smallest portion of my retirement portfolio on a private REIT. Probably you may want to consider the same. Thanks for joining me.